Ladies and gentlemen of the crypto space, we're live on a Friday, October 4th at 11:31 a.m. Stagnation, price action. These are the types of things that drive a person mad. But fine, it's not easy, and it's understandable why it drives people mad. It is not easy to understand the present, as in current conditions, on a relatively short time frame like a day. And it's even harder to have a zoomed out perspective from a non-standard time frame. A non-standard time frame relative to humanity is not on a daily basis. Like you wake up, what are you doing? Who you talking to? What kind of shit you got on the calendar? What are you doing at the office? What are you talking about? Inspecting things from a week over week basis or a month over month basis. That requires like calibration. That requires programming. That is not standard. That requires not assimilation, acclimation to something that most people don't really consider. How do you neglect all the details and granularity on a day over day basis and inspect things from a week over week basis? So, anyway, that's what I like to do. Maybe that is consistent a little bit with not an objective perspective, but the pursuit of an objective perspective. This is the pursuit of trying to understand something that's not inherent in our programming. You're never going to understand things objectively because we're always coming from a subjective bias. That's the nature of humanity, which is exactly the same thing from a week over week, month over month, or a 6 month over 6 month time frame. Imagine the paleontologists and the folks that literally study dates dating back millions of years. Dare I say the cosmologists and billions of years. How do you get that kind of perspective? Anyway, so the point is that type of perspective is acquired over time after trying to mentally project yourself into that kind of setting where you can start to understand and hopefully appreciate what it all means. So, the most interesting thing I could say to start off this whole damn stream is Bitcoin is basically at all time highs. Now, why do I say that? Because folks on social media and just the general prevailing sentiment is, oh, the pullback isn't going to roll over. This shit is at a premium. Do you see this chart? It's literally sitting at the candle body close of H1 2024. We are way above the candle body closes of 2021. I mean, look at this. The candle body closes on the 6 month chart with 46,000, basically. Um, and it just went down. It went down. It started going down within the H1, H2 21, and then 22 just rolled over. So, second half of 21 was that complete wick structure we see. And then 22 is just a continuation downward. So, we are so far beyond the price point of what we historically had as exuberant price points. Even from a wick standpoint, back in all of 21, we're sitting at the top portion of the wick, proportionally speaking. Anywho, so I think that is a very meaningful observation. And yet again, we find ourselves from a monthly perspective sitting on the 10 SMA. Constructive support. Now, if you look back here, back in 21, it's not something I like to do. But look at all these monthly supports. Just rode the 50 SMA all the way up, and that's consistent with what we're doing here. Except the difference is first interaction with the 10 SMA in the monthly was in July of 24. So we're 1, 2, 3 months in the subsequent interactions with the 10 SMA. Here we were 1, 2, 3, 4, 5. So we're 3 months in, and here on the fifth month back in 21 was a significant diversion, which is an aberration, a deviation from the mean significantly. And all that buy pressure led to punching through that that moving average to the downside relatively quickly from a monthly candle standpoint. Interesting thoughts. Are we in second half of 2021 in this particular trend, or are we engaging with markets this early and basically Q3, Q4 2020 type of price action? Very easy to observe that maybe the bounce off the bottom in 22, what Bitcoin's been rallying ferociously since 2022. This could be akin to the 2020 price action. That is a massive, that's a three, six, oh, that's almost a 400% appreciation. That's nuts in 2 years' time. So it's hard for folks to sometimes put that into context, the reality. We've been in the market for 2 years. That shit is crazy. 400% off the lows. So, in so many regards, we're at a significant premium, especially compared to 20 and 21 from a 6 month candle body close standpoint. In so many regards, and this is just a Bitcoin inspection chart, we're at support. And interestingly, from a 10 SMA on the monthly support, this is very constructive because of the level, not just the 10 SMA support, it's the level. These wicks at this level are quite fascinating because that's the candle body close on the November 2021 candle. That's wild. That is insane to look at. This chart is insane from a monthly perspective. And there we find a little bit of confluence on the weekly, going to the short-term time frame perspectives here. Flip that over. We got a 100, 200 cross. It's at the bottom. There's no divergence moving average standpoint. So there's no relatively short-term volatility where you get that kind of divergence between the 100 and the 200. And you got also constructive bounces on the 50 SMA, the weekly 50. A little bit more constructive when you look at the level. This is the same level, obviously, when looking through the monthly, looking at the monthly chart. So we pierce through our highs and we literally, this is fascinating from a weekly and a monthly standpoint, and just disturbing and a little bit, I would say, most concerning from a 6 month chart standpoint, how divergent from the mean we are. You could literally have a breakdown to 35,000 and be like, all right, you're still in an uptrend. I show folks this sometimes. I mean, it's straight up. Talking about the 10, the 6 month 10 SMA, it just goes up. You come back on average 6 months later, and whatever price you buy it at, the odds are it's higher. And obviously, much more favorable if you buy it at a price lower than the moving average. So that's why we talk often about discounts. So the big discounts were in 2022, coming off of obviously FTX, Celsius, BlockFi, so on and so forth. That was a rare divergence to the downside. We also had that in H1 2020, which is predominantly March, but that was the divergence there. So basically, this was our March of 2020 back in 22 in a 2 year increment. What happened to the cyclicality, the 4 year cyclicality? I don't know. Seems like it's coincidental. A little bit of strength today with awkward numbers. Obviously, the jobs report and all that bullshit. But that was a big pop off the bottom on the daily for the dollar. Looking at the dollar candle, was a breach of the 50 SMA to the upside on the daily. Brief retest, creating a wick, and then shooting up basically in almost 500 points. That is a large candle, which is constructive. It tells us something significant about market structure, about the opinions of people and what they're thinking and why they're doing what they're doing. So 102,579, let's look for a little bit of resistance. Punch right through the 10 on the weekly, and on the monthly, there doesn't seem to be much resistance. We're at the 10 above head. 10 is relatively weak compared to a 50. Any levels that are interesting? I mean, all of this is interesting price action in consideration of a level. It's basically horizontal price action with a large range, with the bottom being 100 and the top with a lower high. eh, Not too significant there. Sitting on what was head and shoulders, that was a clear head and shoulders. So maybe we have a delayed reaction in that regard. I don't know how that technicals would carry past the break to the upside. It's not really an invalidation of it. Boom, boom, boom. And then it didn't really get past the head. So it's not like it was break out. So maybe this is a fake out and then a breakdown. And then you finally fall through with this entire structure here, basically foreshadowing from a forward looking perspective weakness in the future. How much in the future? You never know how much in the future, but the point is from a 20-week, 30, good part of a year weekly candle perspective, it finally breaks down below the 200 on the weekly. Now, that's a critical level, 200 on the weekly. So I guess maybe a good statement consistent with the title of the stream is weakness, stagnation, the number go down. When does price go up? Price goes up when the dollar goes down, mostly. And then the other component is when the move indicator rolls over. So I posted a potential path last night. I rarely talk about those types of things. Where do I think prices will be in the future? Train myself to be a little bit indifferent about prices. Thus, what we do in dividend investing, just care about cash flow. But DXY would be constructive at around 95. Would be a breach to the downside, probably right around there. Maybe a wick. Then you get a retest right back to the 100 level. I mean, right back. We're talking about weeks between bottoming process, big blow off bottom wick, nice hammer at the bottom, and then resistance at the 100 mark, and that would be quite constructive. So there's a variety of different ways that this could play out as constructive. There's obviously a bit of support here between 80, 89 region. 89 region is a historic resistance flipped support back in 2009. And a breach below here, and Party on Garth, that'd be Wayne's World type shit, coinciding with other structural behaviors like bond market volatility rolling over, and then it just gets weird. Let's take a look real quick at Bitcoin for 2024, so 22, Q3, Q4, 2023. Nice bottom. There's uncertainty. You're hovering around the 200 SMA. I'll highlight. So you're hovering around 200 SMA, and then you get significant divergence from the 200 SMA to the upside back in about September of 23, Q3, Q4 23. And if you go over to the DXY, what coincides with September 23, July, let's say October, Q3, Q4 23. Oh shit, it's this rollover in the so it's a being meaningful move, 107 to 100, 7 point move. And this is your Bitcoin coming off 15,000. 113 down to 101. That is a massive move and certainly accounts for a lot of the outperformance of risk assets across the board. As we've discussed, our depreciation has that effect. So we've had strength in July, and that's because of this, but we have yet to really breach the critical level set back in July of 23, July of last year, which happens to coincide. And that's why it's so fascinating looking at both levels and moving averages. Look, resistance. It's this green line, if you could see what I'm highlighting. Resistance, resistance, resistance. So let's start out one at a time. Resistance, resistance, breakout, failed breakout, resistance, breakout, failed breakout. And now here, butter slice right through, retest, held it to the T as support. And there's a couple of candle body closes right on that line. Coincidence or structural? And then there's just horizontal chop for the last 7 months, more or less. So now we're back at that level, even if you got a move up to 102. You would need to literally get way above like 107 to have some sort of structure to the upside, and it would take months, if not years, to try and express strength rather than weakness. You don't get a drop from 114 to 100 without expressing weakness. So this is a position of support, and a position of support is a position of weakness. So you easily get an interaction with the 100. What is this? The weekly 100. Let's say you get a rejection. That's kind of consistent with exactly what the average price is doing. Average price is rolling over. How do you know that? Because the 100 SMA is rolling over. So that is an expression of weakness. So eventually, mm, December 24, I don't know, Q4, which we're in right now in 24, Q1 2025, I would say the dollar is to express further weakness, eventually breaching that 100 mark, which would be basically the 200 SMA, as well as an entire invalidation of this entire section of price action, which is more or less May 22 and beyond. That would be quite constructive. Now, if you see that kind of market behavior, delete this chart. If you see that market behavior coinciding with move rolling over to 80, there you go. Now you're talking about stagnation completely resolving itself, and you start to see that outperformance and that frenzy and that excitement in financial markets broadly, and more specifically, the risk markets that we appreciate, which is the crypto space. Yen back at 148. Talk about a retest. So that was a clear trend line. Actually, quite interesting. Has a very clear trend line. So trends are, yeah, weight is levels and then moving averages and then trends. But this is a decent trend line, and that was a pierce right through it. And that's also a clear retest from a weekly perspective in this region right here. Um, Bounce 100 SMA, but we're going to start interacting potentially with the 50 SMA on the weekly yet again, which coincides with the trend line. It's funny how things coincide. It's funny how things create and offer confluence in so many regards. Things are funny quite often. Trends do that, which implies there's people making decisions on the other end. It's a collective, it's a concerted effort. The consensus driven decision. Charts are a manifestation of consensus. So you get the rejection of the 50 SMA, let's say, rejection also with trend line back down to 100. And just like we've had in September of 24 was a pierce right through the 100. Great. So you get another pierce through the 100 and you produce a lower low. And that would be expressive of the stagnation going bye-bye. So that's interesting. So like I said, you don't always get discounts. Check this out. Take this perspective. Zoom this out. So, what is a premium? What is a discount? If you're buying above the average price, you're paying a premium. If you're buying below an average price, you're paying a discount. So, from a monthly time frame perspective, we're at a significant premium. The average price of Bitcoin is 35,000. Anything above that is a buying it. You're buying at a premium as compared to a discount. 30 and below. These are discounts. Obviously, even at a discount, 30 is 100% higher than where we were in 2022. So these are just very interesting things to get a contextual awareness of what the hell is going on and where we are. Markets had a significant premium. So if Bitcoin reprices to 35 to 40, social media are going to go crazy. They're going to start flailing their arms all over the place. Meanwhile, from a technical perspective, still at a premium, expressive of support, higher lows. Doesn't mean what people think it means. I think that's a very important takeaway. Plus, we got some nice confluence abound with gold, which is just strong, near or around all-time high, 2679 or whatever this top was. It wasn't a candle body close. 2 months left on the 6 month. If you go over to the monthly, candle body close was 2634. So we are above last month's body close on gold. We are currently at all-time high from a monthly perspective. If it closes right now, this month's candle body close is higher than last month's higher high. This chart is signal through the noise. It's the golden canary in the coal mine. You combine that with a couple of other indicators like oil back up to 74, geopolitical tensions flaring up, not just in the Middle East, it's everywhere. Internal conflict, politics, that's all drives and contributes to financial unease. That was a big pop. We were at like 68. Where were we at? 66. You're down at 66 and a pop to 74. Talk about a reversal. That's an intra-month reversal. Big price action on energy, the ultimate primitive. Anywho, don't necessarily even need to go into DeFi. We understand DeFi is going to be expressive of weakness under this type of market condition, albeit from a total three perspective, I find the chart quite constructive. It's at a relative discount, significant pullback. We're not at all-time highs. From a candle body close perspective, we're not even near all-time highs. So this market, from a non-Bitcoin and Ethereum perspective, and Ethereum's clearly been lagging Bitcoin, have been lagging significantly from a market cap and individual price action standpoint. So we have yet to see a significant move. 290, it's up 100% off the bottom. So Bitcoin's up 4x off the bottom, but non total three is up 1x off the bottom. That's quite interesting. Certainly expressive of lagging, but also expressive of how crazy things get when this market starts to move. The odds are all-time highs get reached, new paradigm is expressed, new narratives form. This is the financial backbone of a digital economy. And things start to get weird. And you get, instead of a 4x, you get your 40x. Hey, you 10x. Let's be a little bit humble about shit for once. Others, excluding top 10 dominance, very constructive chart from a trend line perspective. That's on the 6 month. Let's give a little bit more granularity. You see that it holds true even on the monthly. Nice support on the 100 on the monthly, moving average on a dominance index. Anyhow, there's confidence there. So you got your higher lows, and we're off the lows, but this is also quite meaningful, consistent with like a total three. We're at the low. Bitcoin's at the highs. This stuff's at the lows. Bitcoin. How do you correct the total three, and how do you correct the others.d um, into a more favorable DeFi market? Bitcoin is relatively elevated and they continues to appreciate as well, which is obviously the prevailing speculation. Except these outperform more. And if Bitcoin doubles from here, you're talking about significant moves in the DeFi slash altcoin space to account for that continued appreciation of Bitcoin. For this dominance to break all-time highs, that gets really weird. And that's you get the multiple in the non-Bitcoin Ethereum space, significant multiples. Y'all remember back in 20 and 21, where top 100 was double-digit billion market cap. That was weird. Well, what's going to be the next one? Everything in the top 100 is fine. It's good part double-digit billion, but triple 100 billion market cap for top 50. All right. I mean, we've seen top 10 damn near close to 100 bill market cap across the board back in 20 and 21. Maybe it's the top 50 this time. That's the type of thing that these markets like to do. Best is always yet to come in that regard. All right, let's go to comments. Let's look at Move real quick. Move rolled over a bit. It was up at 104, but we were as low as 90 and change. We were as low as 91 over the last month. 90s this month. But what does that directionality indicate? Yeah, let's just draw a line to make things super easy. That directionality indicates lower highs from a volatility standpoint. So what triggers that? Bond market volatility falling out or rolling over in considering um, the volatility that we experience in cross currency valuations, well as nation state capital flows and trade and geopolitical uncertainty. It's not consistent with bond market volatility falling. My point being that this is incredibly obviously a manifestation of both geopolitical collusion, but also regulatory authority um, facilities or policy. It's like the dollar not going up. There's only one way the dollar doesn't go up: collusion. So this coming down much more orderly and consistently with lower highs as compared to a DXY, for instance. Um, I think this is going to present more signal than it historically has with regard to the relationship to the DXY. So the DXY, historically, this was your bull market. Very clear breaches of moving averages to the downside. This was 16, 17, and heading into 18. And 18, boom, ripped to the upside, and that's when all bets were off. 18 and 19 was just complete stagnation. But here was 20 and 21. Com- Significant depreciation, piercing moving averages, and dip below into a discount region. So, because of the geopolitical uncertainty and the complexities in global financials from a debt to GDP ratio, is very possibly the case. We see continued depreciation or strength in the dollar. And that wouldn't surprise me. Thus, last night's post that, although maybe it was earlier this morning, I don't even know at this point, but maybe we see strength in the dollar. Maybe we only get to like 95. So that's why I'm saying that move indicator may be increasing signal. Might not be able to see the bull market as clearly as we have historically if the dollar is excessively strong for a, a variety of meaningful reasons. So the move indicator may have outsized signal. Like if you see, for instance, if the dollar is at 102,605, which is literally its current price, and move just got obliterated to 80, 70, 60, there's your bull market. That would be absolutely wild because that is basically game on, Garth, from a global banking perspective. That's when all the taps open and shit gets weird. But then again, so that basically is a precursor, a forward-looking indicator of increased dollar supply because instead of buying dollars, people are able to print dollars. That's outside of the United States. So that would take pressure off our demand, which should decrease relative dollar pricing. It's a fascinating thing. There's so many chicken and the eggs. Knock-on effects go recursive in so many ways. Um, but maybe the outsized demand for the dollar, considering the global debt construct and geopolitical tensions, suppress the downward pressure on the dollar resulting from a collapse in bond market volatility. That could make sense. That would explain it. They're just the system is offsetting the depreciation of the dollar with just excessive um, continued bullshit from a fiscal deficit perspective and whatever the hell and that's frankly from a nation state to nation state perspective. Everyone's fiscal deficit is an absolute abomination. Okay, enough of me rambling. That was a solid 30 minutes of me rambling. Holy shit, did I take a breath at all? I don't think I did. Arrow in the house. Good morning. Bitcoin, bro. Good morning. Thoughts on ZK Sync or Loopring? Loopring is old school. Yeah, ZK Sync. All this stuff is good stuff. How many chains are there? I don't know. I don't know. Uh, what could I say? Sometimes it's the most obvious thing that we all miss, or just don't. don't depreciate as much as we should. Like Base was quite dismissed when launched. In hindsight, fucking Coinbase's Ethereum L2, some obvious shit. So I don't know. In that regard, maybe Consensus and Linnea are more interesting than I think, even though the price action isn't appreciated. Consensus it literally is Ethereum, so that's kind of the base Coinbase type of inspection on the potential significance of a chain. I don't know. No one knows anything. All you have is a gut instinct and a capacity to make a risk adjusted choice. And we do that vis-a-vis position size uh, and optimally acquiring at discounted prices. But it's a good thought. ZK, we got scroll too. Scroll is meaningful. Um, where does it end? How many chains are there? Even Sony has a chain at this point. What was the news? Visa. Visa's issuance of assets on Ethereum. You think? I don't think they're going to be going to the O2s first. I think. I think many things like institutions. Institutions don't care about gas fees. You make it a 100 mil transaction, you don't care if a transaction costs $1,000. So maybe the L2s from a micropayments perspective, but they're not talking about payments. We already have payments. We already have debit cards, which you could load with crypto, which is quite extraordinary compared to 20 and 21. But they're talking about like asset issuance from like a chain link narrative standpoint, an RWA standpoint, where banks can get their stable coins into the DeFi space. Uh, I don't fully appreciate uh, what it will look like until they start to execute their roadmap. Um, but there's one thing I know: relative value is relative. So if banks are issuing dollars here, they kind of want their dollar to be worth a dollar, even though it could always be redeemed for a dollar. But we know damn well that redemption component of a stablecoin design is only a part of what is required for the quote unquote peg. So I think the next couple of years are going to be quite interesting. We clearly see the foreshadow, and that's important to really take note of. It's happening. Visa announced it, and that is meaningful. That means these types of assets are coming, and we already see them with the likes of PayPal. So the question becomes, over the next couple of years, how do you maintain peg? Oh, that's another conversation. That's maybe an investment type of conversation, which has been underappreciated for far too long. Anywho, that's not the point. To dwell in the depreciation. It's to understand why things would appreciate when they're ready to appreciate. Sir Joe present, Assoon in the house. Good morning, Cap. Morning, Cap. All right, and good morning. Leviathan's in the house. I got to get by the stream if that's Sam. I got to get by over there. I got to say what's up. I tried my best. Thank you. Appreciate the kind words. DA advisor in the house. Always a pleasure, my friend. Shana Tova as well. Yes, indeed. Shabbat Shalom. It is Friday. Good morning, buddy. Arrow, I'd love for Linnea to be appreciated. Doesn't seem like there's much on there besides memes. Even Scroll has more real protocols at the moment. Well, this is the system scraping the bottom of the barrel. And that is a fascinating statement to say, considering analytics. Go over to stables. Considering there's $172 billion in the space. All right, we knock out what's on Tron because that's just separate and apart. There's $112 billion across EVM chains plus Solana. So, let's digest that reality for a second. We're scraping the bottom of the barrel of financial activity on these markets. $112 billion. It was a half a million dollars in 2019. $500,000. And that's from personal experience. I remember seeing it on the screen. So the growth is staggering. So probably what we have is massive dilution. That is quite a reasonable statement. If $112 billion was on Ethereum mainnet and that was the only chain to interact with, uh, price appreciation of protocols and assets, the capital would be significantly concentrated into fewer assets. So I think that is what is occurring in good part. Definitely dilution from a network standpoint as well as from a protocol standpoint. How many redundant protocols are we working with? We literally talk about Kingdom that has the same protocol on how many chains, or even a mainnet deployed on other chains, and still that's in its infancy, really. Seamless cross chain, you know, that's still in its infancy, you know, tapioca. So what does it mean when an asset is everywhere all at once? And it's so what are these bridges? What is it all leading to? How do these chains come together? I think about that quite often. And there's things that I know for certain. These chains and frankly the protocol valuations from a market cap standpoint are under monetized. Um, they're deflated. They're not inflated because look at the amount of dollar supply. There's $112 billion. So what we have here is a lack of concentration of capital because of excessive chain diversification, dilution, and protocol saturation, protocol redundancy. Um, what we probably have going forward is winners and losers, which kind of makes sense. We're talking about financials here. There's always winners and losers. They have this much capital, excess diversification, excess dilution. Oh, some of them are going to win and some of them are going to lose. And what you end up having is basically a Darwinian process of partially natural selection, but also like outperformance. Kind of like what stays in the lead remains in the lead and just keeps growing. The market leader, like an aerodrome, for instance, or a Uniswap and a Curve on mainnet, quite entrenched from a dominant standpoint. It's the go-to place to do what you want to do. Um, Velodrome, Optimism. I mean, the market leaders. That's a very big takeaway heading into more favorable conditions. Uniswap getting flipped by Velodrome on Optimism, that was very rare. Very, very rare. Same on Base. Bit of a different story on Base because the Coinbase involvement. But what's in the lead tends to remain in the lead. That's just a very interesting takeaway. It's very hard, if not recommended, to bet on invalidation of a leader. That only happens so often. That's where the big money's made. But the leader just remaining in the lead, that's a big deal because we're talking about a space that hasn't been monetized. Even Aerodrome isn't monetized. Talking about 700 mil. Given the volume of transactions that it's doing transactions that are mind-boggling outside the scope of an actual bank. This is independent infrastructure, novel technology. It's overwhelmingly impressive what it's doing. And this is the type of valuation it gets. 700 and change $1 million market cap. So this whole space is deflated, relatively depressed, and that is just a component of the inspection everyone must do in order to really get your head around where we are and where shit's heading. Prices will not be like this forever. At some point, broadly, all of these assets appreciate. Anywho, yeah, I know. I would love Nile and Linnea to do very well. Right now, the revenue from Nile is abysmal. I have just, I would argue the statement I would make relative to my capital allocation, waste of money. Same with even worse for Cleopatra, just a waste of money. I wasted so much money. Ramses, on the other hand, I acquired at the right time and at the right price, and is a meaningful contribution to the portfolio's revenue. So in hindsight, I got expansion happy. I saw something that worked, and I'm like, what else is working? Oh, looks like Kingdom has other protocol. So in hindsight, I spent too much. And that is the most important thing we all need to learn. Don't have to buy shit. Spending slash buying needs to be the hardest thing you do. Need to have a goddamn good reason. And my only reason was it's related to Ramses. So that right there was a mistake. It was a big deal. Like when I was holding out for before Ramses, what are we talking about? Like a convex or an aura position? We're talking about like late 22, 23 type acquisitions. Folks that have been with me for some time, especially in Discord, know these are very few things that I do. I take very few positions. It's very concentrated and a very crafted portfolio at this point. So Ramses took me a while to really pull the trigger, and that was a big one because um, it was at a very depressed price. It had lows, and I had the capital and to probably swing the price and probably drew in additional capital. Anyway, I didn't have that with Nile and Clio. And in hindsight, I need to be more careful on how I deploy capital and what size. You have to be certainly very considerate of how much capital you have because if let's say you got, 5, 10, 15, 20, whatever, 30, 40, 50, and your effective position size is like 30, 40 grand, you're leaving yourself at 10 grand. Is that an effective free cash amount? That's a very interesting thing to consider. Never blow your whole load. Never go full DeFi. Um, although also so early. Yes, very true. Era, what do you think both Velodrome and Bra coming to Fraxel have been tracking process progress, if any, on Fraxel? Fraxel has been acquiring more capital. So yeah, that is the most interesting observation aside from BAM coming out. Still, nothing has changed. They're one of the most innovative teams and pieces of technology in the entire crypto space. It is clearly an underappreciated, frankly, an unappreciated asset at this point with their own L2, optimistic super chain, literally bonds. They have an actual real world entity that buys government bonds. And so they have their own RWAs as well as they have their staking, their LSDs. They have their own L2. There's probably one of the most sophisticated and comprehensive and robust protocols in the entire crypto space. So the takeaway there is best tech isn't always the best investment. Doesn't mean you don't take the investment. You just have to make sure you manage your expectations. And at some point, the investment should be appreciated by others as well because it's a hell of a tech stack. It needs more favorable conditions. Maximum opinion fracs. Leave it at that. Instead of wondering the winners, to m- to me, it's knowing the losers. I look at crypto now, musical chairs, not about how many great ones there are, because to me, coins die faster than growth. Yeah, but these are very generic concepts like crypto, coins, meme coins, tickers. Folks drive themselves nuts over this shit. And that's why I define things in terms of business and fintech and actual business practice. Are you a foreign exchange, a credit provider, a dollar liability bank, a money market, a derivatives protocol, uh, FXN, one of the best examples of a derivatives protocol, stake, stake DAO, convex. I mean, the list goes on. The list goes on. How many new derivatives protocols are there? And that is a good takeaway, something to observe about how you can inspect these markets in a way other than coins and tokens and prices and define your rules, I guess. Bit of a digression, but good comment. Just know that very loose inspection of the crypto markets is just not in anyone's best interest. Price, so obsessed with price. But that's hard to say because everyone should have an appreciation of price. Meaning, obviously, if I buy something and it's down 90%, yeah, that's probably not the best thing to do. But there's so much more. There's got to be more. There's got to be more to all of this. What we do, why we do it, and that's why I talk in terms nowadays of what do you own? I don't. The price isn't the most important thing. The spot price isn't the most important thing. What you own, it's your purchase price. You want to buy it cheap. You want to buy good things cheap. And that's kind of consistent with today's title of the stream. You don't necessarily always get a discount. And that's been running through my mind with regard to aerodrome. But then I keep coming back to other parts of that thought experiment, just one chain. And that I come back to like, I need that confluence. One chain. It's doing really well, really well. It's the leader of the pack, but it's still one chain. Is base the chain to end all chains? That makes no sense. Not the way financials work. Got plenty of countries around the world. The whole world hasn't been folded into the United States. Everyone has a different opinion on how to execute things. So that's just not the way things work. There is no one chain to rule them all, just as there is no one nation to rule them all. It's not the way humanity works. So now I'm invalidating um, many different considerations for why one would want to have a position in an aerodrome at a not a discount, at a relative premium. And are you ever going to get that real discount back to the origins? I don't think so. So that's part of the argument I just said. Sometimes you're never going to get that discount. Not easy, very complicated. Buddy, last few months have taught me most of this stuff is garbage. Well, but you're not thinking about most of this stuff. You're thinking about the things that are significant. That's the entire conversation, identifying what is meaningful, of which it's only a handful. I mean, how many things do we talk about on Discord? It's probably like a dozen, 2 dozen different protocols. And everything else is based on just trading of price points. And we don't really care what people are trading. And that's the whole point of owning like a foreign exchange, being a liquidity provider. And that's a sense of what we are from a governance perspective. We finance liquidity and we don't care what people are trading. What we care about is the actual exchange. So in that regard, there's only a dozen, 2 dozen, 3 dozen interesting things to even consider owning in all of crypto. And we know everyone else is going to buy all the other shit, the 10,000 protocols. Everyone else is going to buy everything else. So that's cool. But we focus and emphasize the things that are significant, the things that are different, the things that are infrastructure. And sure, the vast majority is garbage. It's relevant. That's not the point. That's not a blanket statement for the crypto space because that's not the most important takeaway of the crypto space. It's the things that are quite significant. Hope that helps. I am DC in the house. Hey, Cap. This year I spent too much time on what's new, just held blue chips and been much healthier. Buffett's punch card theory is ringing in my mind. Now I'm okay with owning all of these alts. Okay, I agree. Blue chip, I can make the statement that from hindsight, I should have bought later. So that comes back to maybe like my Ramsey's acquisition, and then I just leaped into a couple of subsequent related buys. And no, buying needs to be the hardest thing you do. So stack, stack, stack cash. And frankly, you could just stack cash because you just have to have patience. Dare you have to wait a year or two? All right, great. So you have more of a stack of cash to buy. And that's literally what he does. He's just the grand master of patience. Because if you own productive business, there's good times, there's bad times. Stack, 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 and when there's an opportunity, you buy, but only if it's at a goddamn good price. Fire sale, hostile takeover. Everyone's panicking. It's never going to stop going down. But you're sitting on a fat stack and you're the contrarian. So you bring up some very good points. Could have just held blue chips. Is probably 22 plus. That was clearly the case from a Bitcoin perspective. I think that that is very obvious in hindsight. In hindsight, punch card theory. Check the boxes. Own with an 18 plus month forward looking perspective on markets, 18, 24. Keep it going. 36, 48 months. And what will be significant? Not now. In 18 months, 24 months, 36 months. What will be significant in the future? That's what you want to own now. And when I think from that perspective, in a growing currency supply global market, I want to own foreign exchange. Just want to own a bank. I just want someone give me collateral so I can print them dollar liabilities. And that's the thing. Buffett always said when you own something, it's like owning a business. Owning stock is like owning a business. So, all right. So in crypto, it's very much more the case as compared to what Buffett talks about with regard to the bullshit stocks, the equity. So by extension, by owning a protocol that takes in collateral and prints liabilities and manages its own dollar liability currency, that's what you do. So you own it. So that I find that always an interesting perspective to have. Buddy, Arrow was great. One to get a pennies, maybe like I say about 5, 10 cents. That would be an acquisition. So the low was like 50, and then you could probably get a 50% off at the time, maybe if you're lucky and you got 25. So that was a decent price considering where we are now. Be up about 400 or 500%. Um, anyway, hindsight's a bitch. Very true. IMDC, yes, indeed. Quite good feedback always. Quite good comments. If you're on X or Twitter, if you have any questions or comments, I'm more than happy to answer anything before we wrap up the stream today. Tapioca testnet is solid. User interface is wild. I'm very much looking forward to how the market will respond to its behavior, its functionality, and this is objectively, which is a very hard statement to say, the only protocol that actually has like this true omni-chain type of asset. You're not going through bridges. You don't need your token can be anywhere. Your TAP or your OUS USDO could be anywhere. Just transfer, 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 transfer. It goes from chain to chain to chain to chain. And that's omni-chain. This is probably going to be when this finally goes live. The first indication of what that is. And independent of what it does from a price point perspective, uh, being able to experience omni-chain is going to be extraordinary. Upside to curve is getting me excited. Well, the upside is what's left. Is there any downside left? At least, I mean, that's a horrible perspective to have from a monthly standpoint. But on to the daily, and it's quite structurally interesting. It's a hell of a line right there. So I didn't draw this red line recently. I probably drew this red line around here a couple months ago, and it's been interacting with it, and that is a 25-cent line. So we'll see. That's the only statement that many people could say, especially persons that are dividend investors and total return type investors. We'll see. The market's going to do what the market's going to do. Markets will market. Anywho, okay. We covered literally the gamut. We went from Bitcoin down to oil and gold and the dollar and the move and the yen. Very nice conversation today. It's a Friday, so don't take life too seriously. Relax, let time do the work, think less, zoom out, big picture, redefine the way you look at things, write down the damn rules, document your shit, write them down. It helps. And enjoy your Friday. Spend time with the family. Hug your kids, hug your wife or husband. Flip side. And I wish you all a wonderful weekend. Stay rational. 231 people made it to the end of the stream. I appreciate each and every one of you. I will see you again on the flip side on a Monday early next week. Till then, peace.